So, good morning, everyone, and welcome to this roundtable. We want to enable you to find a next destination where you can expand and what from us in terms of support and how to deal with challenges in these countries. My name is Angela Di Rosa, and I'm Senior Consultant for Southeast Asia at Switzerland Global Enterprise and your Fintech contact person, and pleased to guide you through this webinar today. But before we move on to the roundtable, in a nutshell, who we are. Switzerland Global Enterprise is the official Swiss organization for export and investment promotion with around 200 employees at offices throughout Switzerland and in 31 countries. We support Swiss and Liechtenstein SMEs in their international business and help innovative foreign companies to establish in Switzerland. My slide colleague is too fast. SG is representing abroad by so-called Swiss business hubs, with our embedded, which are embedded either in Swiss embassies or in Swiss consulates. And when in-depth expertise is requested, we engage local experts. And all of them together add up to a network for you that can provide targeted support at your various of internationalization, no matter in which stage or which phase you are right now. Martin, our task today is to challenge our speakers, right? Our aim is to get as much as possible to enable you to decide if Alto has potential in one of these countries, and if this is the case, what possible next step you need to go or need to do. It will basically be a real case. I would right away leave the floor to Martin to introduce yourself and to introduce the Alto Wealth platform. And I see that you have settled everything already for the demo.
Perfect. Grüezi miteinander. Guten Morgen as well from my side. I'm happy to be here as CEO of Alto and to be a little bit like the guinea pig, what Switzerland Global Enterprise can do for Swiss fintechs. To start with, I would quickly like to give you an introduction about our company. So just everybody has the setting, the scene, the understanding why going international is important. And I would like here as well to underline, I think for all Swiss fintech, as we are very small as a market, especially for B2C in Switzerland, having a strategy to go international is super crucial to be able to scale. So therefore, welcome. At Alto, we provide simplicity for complex wealth. I don't know how many of you already heard or seen our company. We are fintech based in Zug with 25 employees. And we have one product, which is the Alto Wealth Platform. The Alto Wealth Platform is an aggregation of wealth data for very wealthy private individual, also called family offices. And it has built in-house with us with two strategic focus. One was co-creatorship. All two stands for all together. I didn't put my 20 years of déformation professionnelle for working for a Swiss bank into it. No, we've been asking our clients, being wealth owners, what do you need to keep track and control what's going on in your total wealth? So we get every day in the interaction with our clients new idea, which we have in weekly sprints and bi-weekly releases, as well, quite speedy into our software integrated. Second, security Swiss engineered. Yes, the Swiss brand has an important value for us as a company. Saving private sensitive data in one spot, in one digital platform, of course, is asking for lots of trust. And here the Swiss brand comes into the game. All over the world, we have still a very high recognition for being very trusted, very secure, very politically stable. So for a Swiss fintech, using this Swiss brand definitely helps for international scaling. So the Alto Wealth Platform, in a nutshell, does 3 steps. It aggregates data. So imagine you have now €1 million have 100 million on your account. This is not just fun in life. No, because you have to work then with 2 or 3 banks. You have real estate, you have private equity, you might have a collection of art. So how do you keep track and control? Exactly, this data aggregation part of Alto helps, as we are connected to all your banks. With one login, you see daily updated data for all your banking activities. Second, control. We try to be as intuitive and transparent as possible. You will see afterwards live how this looks like. So therefore, having the control and seeing what's going on in your total wealth is super important. And last but not least, privacy. As said, we store all our data in Switzerland. We a software as a service solution. So that's a very important pillar of our value proposition. But on the platform, as you can save as well all documents, you can share these documents securely and encrypted with your network, like your tax advisor or your other family members. And for that, the 100% Swiss value chain is, of course, of big value. So all software engineers are in-house. Out of these 25, 18 are in software engineering. So we have everything in-house which you need to develop a fancy software. If we go on, our roadmap to scale. I have to say our roadmap to scale up until today that we are in our Swiss core business, distributing the software either to B2C, but as well to B2B, where we have currently 28 multifamily offices or private banks using our platform in white labeling. Only as a second step, and you see, we haven't defined when it starts. It would have been planned 2023. We wanted to start with international growth. But things are moving on sometimes faster than expected, because going global is already a reality for us. We have had 2 years ago an article in the Forbes magazine. So if somebody Googles family office software, we are appearing quite prominently. We have every week 5-6 requests from all over the world for clients interested in our software product. Therefore, by today, we have already clients out of 14 countries as clients, but we are not actively marketing these countries. So therefore, for us, it's a very crucial stage for our company to decide what is the next step, where shall we strategically invest in a specific market to do business development on the ground. And therefore, for us, collaboration with Switzerland Global Enterprise is therefore a very, very important point. But before we go in this kind of advice from SGE towards Alto, I would like to quickly introduce you the Alto Wealth Platform Live. Let me start up the screen. So now you should see the Alto Wealth Platform. So let's assume a private individual coming in the morning and say, hey, I want to know now what's going on in my wealth. So for breakfast, for my coffee and Gipfeli, I'll start it up and I see, hey, nice. Today, my total wealth million. As you see already, we try to be as intuitive as possible, because having 50 or 100 million doesn't mean that you're professional. And if you look next time at your bank's asset statements or e-banking tool, they don't really have an easy language, a simple language to understand. Therefore, we write sentences. Your net wealth has increased by 22.1 million year to date, resulting from performance and net cash flow. We try to visualize as much as possible, as you can see here, because visualization helps as well to understand things. The client has then a dashboard, how he's invested in terms of asset classes, currencies, countries, or sector. And he sees in his dashboard what was then a good or bad performer. So like crypto being here the best performing asset class, or if we look at single stocks, Vertex minus 20% has been year to date the worst performing one. Everything is intuitive, everything is clickable. It's either on a browser, on an iPad, or as well on your mobile phone. And from here, he can start a deep dive. So if he wants to compare his asset classes, he can click on it. He might see it either here as a card view, or he can compare it as well in time series, comparing now the asset classes year to date, where we see crypto has definitely outperformed. Or he can compare as well his banks. So here he sees all the different custodian banks or asset manager that he has. If we move away the crypto assets, so we can better compare as well the performance of the banks. So he really sees which bank has better delivered or not. For our clients, it's not only about the bank accounts, it's as well about non-bankable assets. So therefore, we have different reports, and one of them, an important one, is the balance sheet, seeing the assets and the liabilities. And on the asset side now, not only what appears in an e-banking, but as well real estate or lifestyle assets. Clicking on it allows the client to see the development of these assets. Maybe as a Ferrari, I don't want to see just a chart, but I want to see the Ferrari. So it's really about providing the client as well an emotional aspect on all these topics in regards to seeing the bankable and non-bankable assets. Maybe here on real estate as well. Of course, seeing all the investments, real estate investments all over the world is something quite fancy to have. Clicking into one investment, you not only see the performance calculation for such an asset, but you see as well under attachment all the right documents in the right place. So if you look for the purchase contract of the hotel, you find it in such an easy way. I would say with that, you have seen a very good insight what we are providing to our clients, and proud that by today we have already clients out of 14 countries. But of course, for us as a company, it's about approaching international market in a strategic way. So one has to do a proper planning for that, and one has to rely on proper expertise for that. And therefore, I'm very glad to team up with Switzerland Global Enterprise for this discussion. And with that, I would say, let's jump into the first country. Let's see where the potential of Alto could lie.
We go to Mexico.
I would say so. Nice to be now in a new jurisdiction with warmer weather, as in Switzerland it's getting colder and colder. So I would foresee that the Swiss brand works very well in Mexico, and therefore moving into the Mexican market, something similar like the Rolex watch could be a real premium brand location for us. So on the Mexican side, it's a huge country, but for us it's difficult to imagine how much market potential do we have. So therefore, Christina, do you have some kind of market knowledge, market numbers for a company like ours to evaluate our potential clientele?
Well, nice to speak to you, Martin. Well, yes, we do. This is the kind of thing that we would do for our clients. First of all, we would look at for example, the number of millionaires in the area. Now, interestingly, in Mexico, there are 264,000 millionaires, and it's quite similar to Singapore. But I want to really direct your thoughts to the market access to the US and Latin America in general. So we know, for example, that Mexico is often used as a springboard by many large organizations, and many organizations situate themselves there to access what's happening in the US and Canada and Latin America. In terms of the number of millionaires, Mexico has access to approximately 44% of global millionaires, whereas in Singapore, it's only 26% with access to China and the rest of Southeast Asia. So it's interesting to look at that point of view. But for your particular market, of course, there are different rules and strategies to engage your type of client. It's not business as usual. So the way we would approach working with you is to discover who your real clients are, how to actually engage with them and identify what size company they are, what their interests are. And that would be part of our go-to-market assessment. Now, we do that with many companies, and specifically for you, that's what we would do for you.
Very interesting. Thanks a lot. I mean, at the end of the day, you mentioned it already, it can be as well a good springboard. I assume given the same time zones, Latin America is super interesting as well. So as a business hub in Mexico, how do you collaborate then with other companies in Latin America, as we could use this country to enter all these kind of markets all in one?
Well, of course, Martin, I think we would use our leverage to our networks, and I'm sure you're fully versed in this area. So first of all, as example today, this is how we're leveraging our connections with government agencies and also chambers of commerce, enterprise hubs. So we would link into our network of contacts and their contacts. Another area which would be really important to you would be the key business influencers in the area, getting you involved and introduced into those networks. Not only would they be potential customers of you, but their circle of networks. So this is something we're very experienced in, is introducing you into those business influencers. Also, we our leverage with the local media to gain visibility for your product and innovations and how you operate. And also we would identify who the relevant associations and industry bodies would be for you, such as the Association of Private Capital. This is where we would facilitate introductions for you and maybe organise other local roundtable events, attending events, and so on. So, of course, the kind of institutions we'd be looking at and the locations and people involved in luxury industry, property investment, philanthropy, those kind of things.
How to close business in Mexico and how to survive that. So I'm keen to hear more about Mexico and looking forward to listen to your presentation. Thank you.
Okay, you're welcome. So first of all, for the rest of our listeners too, it's a very exciting place, and I want to encourage you to look at Mexico. First of all, let's think a little bit about the credentials. Well, you probably would be surprised to know that the EU lists Mexico as the #1 Latin American trade partner. Now, I thought that was really an interesting fact and an insight, and it's not a surprise with its location as a springboard to the rest of the Americas, Latin America and US. It also, which is really important, Martin, it's very price competitive, as you would imagine, and it's a minimum of 50% less expensive to do business there than, for example, the US. Also, there's access to capital. Now, of the 54 private equity funds in Mexico, it's a 50-50 split. 50% are national investment funds, but 50% are international. Now, this again gives credibility that people and players and pioneers are already in the market because they can see the potential. And as you would expect, the growth of the number of fintech companies in the market is growing at approximately 30% per year. And of those companies, 31% are already for market. And I was informed last week that 3 of the recent unicorns in Mexico, 2 are in the fintech sector. So I think really the credentials are there, that things are happening in Mexico and people are using it as a springboard. Now, so what other reasons are there for the success stories that these quality entrepreneurs are generating? Did you know that out of a population in Mexico of 126 million, 119 are using mobiles? So also, the current transactions are mostly in cash, so the potential is extraordinary. Many people don't have access to traditional banking, so the gap is huge. But the adoption rate is at 72%, and people feel that Mexico is in the same place as Brazil was 3 or 4 years ago. We've got free trade agreement with the US and Canada. And also there's a great deal of attention on legal instruments in this sector. So there are very good reasons why you should consider have a fresh look at doing business in Mexico, at least for an exploratory first stage and a deeper dive look at what could happen. There are already many players. So for example, the large branded companies are already there. So you should be asking yourself, why are they choosing that as the regional headquarters? people from other countries within Latin America and from the US are reporting into a headquarters in Mexico. So people before us have already done the due diligence. We've already established that there's several unicorns already. So the pioneers are there, the multinational brands are there, there's access to capital, access to the rest of Latin America and the US. So, you know, we would invite businesses or listeners to talk to us, to take a fresh look at Mexico and perhaps take a look at the recent report that we provided.
Thank you very much.
You're welcome.
Thank you, Christina. Yeah, that's really so interesting to see and to compare these countries. And with this, I would suggest to go to South Africa. We have Daniel with us. Daniel, you will talk a bit Mauritius, and Mauritius brings me back to good holiday memories, but at the same time, it is the place to be when it comes to fintech in Africa. Can you tell us a bit more on the setup and content of that said Africa Fintech Festival that just took place? Are there any news that you can share with us?
Sure. Thank you, Angela.
Before I give over to Mark. Yeah,
sounds good. Thank you very much, Angela, and also welcome from my side to this roundtable in fintech with a ticket, as it seems, around the world. So it's always good to have a vacation memories, but also to come back to the question. The African Fintech Festival is one of the biggest Pan-African fintech movements on the continent. In close collaboration with the African Fintech Network, the Mauritius Africa Fintech Hub has just concluded its third edition in Mauritius since the launch in 2018, beforehand in Nigeria and in Uganda in 2019. The event is open to all kinds of stakeholders in the fintech and allied fields, including entrepreneurs, SMEs, startups, corporations, universities, financial service providers, tech companies, investors, and regulators. This year's theme was Fintech, Sustainability, and Innovation, the power trio to fast forward Africa's growth and address the following topics. Digital ID, streamlining customer due diligence to enhance the customer experience. I think that's possibly something very interesting also to Alto. State of blockchain and crypto asset regulations in Africa. Empowering the future, the importance of digital financial literacy, digital transformation in banking, deepening access in financial services for African SMEs, but also the modernization, the fight against financial crime, which itself could be a topic on its own on today's webinar, I guess, and will be filling much of the time that we have available. As the security in the digital space of the modernization goes hand in hand with the innovation process. Maybe briefly to Swiss Business Hub Southern Africa, we are active in Southern and East Africa in a total of 17 markets. And hence my approach today is also rather on an African context than a single market approach, even though I'll be speaking about Mauritius in a bit more detail. Markets like Nigeria, Kenya, South Africa, but also, as I said, Mauritius to play a very active role in the fintech space on the continent. The mobile phone penetration rate is shy of 70% in Africa, the last not fully economically developed continent in the world, and hence there's a huge potential for all sorts of fintech. A special emphasis is need to be given to the payment systems as a catalyst, not only to leapfrogging technologies, but also for the growing population and the middle class. The financial inclusion of the majority of the African population that do not have bank accounts for their needs in the participation in these new technologies, there's further opportunities, not only in classical fintech, but also in the agri-tech business all over Africa. Maybe an example at this space, if you are a small-scale farmer in Rwanda and you have access to these new developments for fintech that include SMS-based applications that use digital finance services to inform smallholder farmers about weather patterns and market information on the prices of crops. This assists the farmer to decide when and where to buy the plant and sell their crops. Another very current example are the mobile payments to remote healthcare workers, which are used to ensure services continuing during health crisis and outbreaks thereof, such as the COVID-19 pandemic. Due to the increased rural electrification in Kenya, the purchase of new solar technology on payment plans that rely on fintechs provide customer credit for families that would have not been able to get a loan from a traditional bank. Therefore, fintech, although mainly attributed to innovation in financial services, can accelerate innovation with the other sectors in Africa and actually also around the globe. One market that does stand out is Mauritius. Despite its relative small market size, it attracts many wealthy individuals due to the favorable legal and regulatory framework. Mauritius is one of the most successful and competitive economies in Africa. For over a decade, Mauritius ranks first in terms of ease of doing business on the continent. Mauritius aims to act as a gateway to the other African markets due to the investment protection and promotion agreements, as well as Mauritius is considered as a safe and financial center. The ongoing work to create the legal framework, which started in 2019 with the regulatory sandbox license and transferring it now to a national regulatory sandbox license, is going on. And now they are in the process to overhaul and adapt the framework again to favor the whole fintech sector in Mauritius. But also other markets such as Kenya strive to become fintech centers on the continent. Many clusters of excellence in specific sectors tend to name their about or after valleys, such as the Crypto Valley for fintech and blockchain in Switzerland, Zug, where Alto is from, or the Trust Valley around the Lake of Geneva. Kenya is using the term Silicon Savannah to promote its fintech ecosystem. And South Africa itself has a very advanced financial sector where fintechs collaborating with banks in order to have better track record and hence become more trustworthy to high network individuals.
That's super interesting. I mean, as one without that much of knowledge about the African continent, of course, it's huge. It has a huge number of population. But for us as a company, we are not only a fintech, but we focus on wealth tech, and wealth tech doesn't go without wealth. So having a large amount of wealth, which countries would you foresee then in Africa to be a potential worthwhile market entry for us?
Okay, thank you for the question. And you see that a bit on my slide that it's more directed towards this kind of a question for the wealth tech market. If you look at the table in there, you see like there's a distinction in between high net worth individuals, which classically come as a definition of people that have over $1 million US net worth. So if we were to be expanding this traditional definition a bit to people that have a wealth or a net income a bit over 100,000 a year might make it a bit more attractive to see like the different segments. And as you can see here, combined of these two efforts, there is South Africa for sure, Egypt, Nigeria, Morocco, and Kenya, and as you can see, also Mauritius appears again with a very high net worth individuals, over 12.5%, which are based in Mauritius. Comes also with a reasoning, since it's a very favorable environment for fintech companies, and also to have the wealth management going on through Mauritius. In South Africa itself, and I think there are we are concluding also a bit on what has said. Trust is really something that is very important in order to be able to go and put all the eggs in one basket with a financial provider or a fintech company. So the track record is important, confidentiality is important. I think that's how it's also written on the slide. What it concludes is that you need to have the trustworthiness. I think like Switzerland as a brand can help here quite significantly already, but also if you were to be able to name the different banks you are working with and collaborate with. And that's also what we are concluding out of the information we have been provided with, that in the South African context, it might be the best to partner up with with local banks and provide innovative fintech solutions for them, because the South African standard high net worth individual will be always trusting the brand, and these brands coming out from banks, and the banks themselves, they have applications, they are also evolving in that space. I think like that's possibly something we will be looking into more detail if you were to be thinking about South Africa, Kenya or Mauritius to set up shop in one way or the other.
Okay, one last question. I mean, before we've been talking about specific countries, Mexico, now we talk about the continent. Of course, having clients is as well combined with the fact that we will go there and send out bills. As soon as you do software as a service cross-border, the VAT topic becomes very complicated. And if we would approach then 6, 7, 8 different countries in Africa, it would be quite a huge step to be administrative compliant in this aspect. How would SG company in that regard to prepare?
Okay, I think you were crossing out for a second there, but the way I understood the question is like how and in what countries it would be more conducive to start the business in terms of the VAT registration and like the implications for Alto to have the best tax setup for their operations.
Correct.
Okay, all right. So I think like we would be looking into strategizing with you. I think like as I said, like South Africa, Mauritius, Kenya, Nigeria, all could be potential markets for you to enter. And luckily, we have in each of these markets also tax experts. I think in general, maybe as an example, in South Africa, the VAT is a system is destination based, meaning like every service rendered and all the goods that are sold are subject to VAT, which is about is exactly 15%, so fairly high compared to Swiss standards. I think there is also VAT might be levied at the zero rate if the services are rendered abroad. I think that's a very general statement that I can make. I think, as you mentioned in the beginning, like it's a complex topic with the tax, and I think like we will be engaging with you and looking like what kind of setup you would want to start in one of the African markets. Is that a branch, a subsidy? Do you have like a partner agreement? What's the frequency of your services rendered from one country to another? Is it a once-off? How can that be optimized with you? I think like that's what we would be coming out of the pocket, is the network that we have in each of these markets with tax experts, legal advisors that we definitely will be activating for you.
Thank you very much. Sounds very promising that we can rely on the right network if we would consider a step into this continent.
In fact, very interesting here, the continent, and then splitting or cutting down to a short list of some potential countries. Martin, let's go to a next big country, I would say. Dear Tarun, last but not least, markets. Let's listen to the Indians' opportunities.
Thank you, Angela. And yes, India, large markets, and there's no pressure being the last speaker, but I'll give it a good shot and pitch India, not the Bollywood version, but the real version, what's it on the ground. So my talk over the next 5-6 minutes is structured in 3 parts. First is what's happening in the fintech segment, a broad overview. And then why is it happening? What are the demand factors? And perhaps the most important third part is the study. What are the key sub-segments we've identified methodically, which provide some of the highest potential for Swiss fintech companies? So that's the three parts, all in less than 5 to 6 minutes. So the first part, Indian fintech environment. India is already amongst the top 3-4 large fintech markets globally. US, China tend to be ahead. We have over 2,000 fintech startups. Interestingly, in the last 10 years, they have created total valuation of about 50-60 billion dollars. About $10 billion of private capital has come in. That's past. Looking into the future, there is an additional value creation of $100 billion in the next 5 years expected out of Indian fintechs, and private capital of 20 to 25 billion expected to come in, right? And there are certain proof already of that. For example, digital lending, it's already a $10 billion order book, and it accounts for 40% of all new personal and consumer loan. You look at digital brokerages, they already have over 1/3 market share. You look at insurance, there are already 80 million consumers who are buying insurance. So all this indicates that the fintech segment is really thriving. But thriving why? So I would leave the 4Ds to look at in India why fintech is thriving, the 4Ds. First D is demography. India, population of 1.4 billion, 50% of the population is below the age of 25. They have not seen life without internet, and median age is 28. So really, what it impacts is the digital adeptness, digital natives, and financial literacy. Yeah? And it's expected that 70% of all household income is owned by these millennials. So demography. Second is digitization. India has over not only the COVID, but really we used to love our cash, right? India was a cash-based economy till about 5 years ago. 97% of the consumer transactions were cash-based. The share has now jumped to over 1/3. So the digital mode of payment has grown by over 10x. In fact, if you compare it with the credit card users, after so many years, we have only 60 million credit card users, whereas 200 million people use mobile payments. We have 30 million merchants accepting mobile payments as point of sales term. The third D is the data. India has 700 million internet users and lowest cost of data amongst globally. And we have nearly 15 gigabytes of data consumption by every consumer. It's not only Bollywood videos. And finally, the most interesting D is the divine interventions, as I call it, by government. We now have formalization of population. All of us have a 12-digit ID. That makes it a unique. We have financial inclusion. We opened 400 million bank accounts over the last 7 years. We have laid one of the most impressive financial infrastructure. I call it the pipeline in terms of unified payment interface, as advanced or even higher than any other country, and enabling fintech regulation. And there, for the audience, the account aggregator is a game changer, wherein an body can collect all your financial data from banks, insurance companies, mutual funds, and provide that to service provider on wealth management, portfolio management, and lending. So these are the 4Ds. Now moving on, what did our study indicated? What we did was we did an analysis of 12 sub-segments on parameters, like on parameters, for example, on what is their comparison vis-a-vis existing solution, what is the demand outlook in the medium term, what is the intensity of competition, regulation, ease of business. And with that, we have identified these segments which you see on the table, on your graph. And because of time constraint, I'll run past very quickly, but the report is available. Number one is security technologies related to data security, network security, security analytics. And all this reason being, Indian companies have been behind the curve on product-based solution for security. Earlier, it was only cheap, but there is now regulation for companies are responsible for data security. And the regulation there has changed on data localization for insurance companies, for banks, for e-commerce companies. As a result, there is opportunity for these security technology companies providing. And the network security, because of connectivity devices, because of in terms of bring your own device. So all these factors have created a niche. Wealth tech, we heard. So in wealth tech, I put India in two categories. One is the ultra net worth individuals. You have about 500,000 odd people who are $1 millionaire. And the second and the more interesting part is that the Indian wealth tech segment is expected to grow from 20 billion to 60 billion in the next 5 years. The number of users are expected to grow from 4 million to 12 million. And within wealth tech, we have identified robo-advisory because our algorithms are still weak. And we have identified portfolio management services related to screens for trading, F&O options, which their customers partner with digital brokerages. I can go on, but on blockchain, we have identified opportunities for under trade finance, under commodity trading, cross-border remittances. Similarly, on red tech, on anti-money laundering regulations, providing tools to meet that requirement. On insurtech, as I mentioned, we are still catching up, and there it is on the underwriting side, it's on digital settlement and on digital distribution. On the high net worth, we have 120 billionaires, and we have over, I think, 20,000 people with between wealth between 100 million to about $1 billion. Martin, happy to take any questions.
Thank you very much. That sounds huge for us, and of course, being attracted as well by these numbers. But if we are a small Swiss company, currently 3 person in business development, an illusion to say. So I think it would be all about B2B and distribution partner. How would you support us to find the right distribution partner to enter this huge market?
Yes. And Martin, this is rightly said. The Indian market is still complex and evolving, and it's important to work with a partner. And a lot of opportunities which I have mentioned are related on the B2B side. Now that requires, because of operational reasons, it also requires a local partner. And as I said, the account aggregator model is something which is really key. So one of our comments would be, when you look at a partner, will it be on a company providing a SaaS to all these portfolio management companies, or it will be a partner in terms of account aggregator? And the Swiss Business Hub India takes regularly the mandates to work on identifying such a partner.
So when we work together with such a partner, of course, then the Swiss brand might be diluted a bit. What would the Swiss brand very important for the Indian market as well?
Oh yes, Swiss brand is of course associated with Bollywood, dancing around in the Alps and with chocolates, but it's also associated with top-end banking, the trust factor. And I think that part, we do not see diluted, depending on, of course, how the terms of the agreement and the visibility is structured. And there are a lot of Swiss firms who are on their own, the large ones, but several of them have partnered with Indian firms. And as long as the product and the service, there is no dilution.
Okay, thanks a lot for this interesting insights in a very new market for us.
This is the end of the webinar. Talk to you soon. Thank you so much, and have a good lunch.
Thank you very much. Bye-bye.
Thank you.
Thank you.
Thank you.
Bye.